If you are just tired of your money just sitting in the bank or worse, getting eaten by inflation, well, this video is for you. Welcome to Investing 101, your beginner's guide to understanding how you can make your money work for you instead of the other way around. Hi, my name is Sowah, and in this video I'll take you from zero to a confident investor. No jargon, no confusion, just practical steps you can start your investing journey. Make sure you give this video a thumbs up, subscribe to this channel, and leave your comment or suggestion or what you think about the video in the comment section. Let's get right into it. Why must you invest? The number one reason why you must invest is inflation and purchasing power. Let's start with something most people think about: inflation. Inflation is a silent killer of wealth. It is a gradual rise of prices over time. The same bowl of rice you bought for 5 cedis 2 years ago might cost 10 cedis today. What does this mean for you? It means that the same amount of money buys less over time. So your 1000 cedis today might have a purchasing power of maybe 800 cedis or 850 5 years to come, just because price has gone up. If your money is just sitting in your wallet, under your bed, or in a regular savings account, earning 1%, 5%, or 6% or less, you are actually losing money in real value. The second reason why you must invest your money, because saving is not enough. Why saving is not enough? Now, saving is important, don't get me wrong. Having an emergency fund is very crucial, but savings alone is not enough to build wealth. Here's why: a bank savings account gives you 1% to 5, maybe less, some even more, every year. And if inflation right now is at 23.8% from December 2024, you are falling behind every year. It's like running on a treadmill. You are moving, but you're not going anywhere. That's why the rich don't just save, they invest. They put their money into things that grows faster than inflation, like the stocks, real estate, businesses, and many more. The third reason why you need to invest your money is the power of compound interest. And that's the real game changer: compound interest. Albert Einstein called it the eighth wonder of the world. It is the idea that your money earns interest, and that interest earns even more interest. Let me make it this simple. If you have 1000 cedis invested in a mutual fund, in a fund or something, earning 10% every year, in your first year, that 1000 cedis becomes 1100 cedis. In the second year, you earn 10%, not on your original 1000 cedis, but on your 1100 cedis, making 1210. And it keeps going. Over 10, 20, 30 years, your money doesn't grow in a straight line, it grows exponentially. And that's the power of letting your money grow for you. And the best part is, the earlier you start, the more powerful compounding becomes. Inflation eats your money, savings keep it safe but slow, but compounding grows it. And that's why investing isn't just an option, but it's a necessity if you want to beat inflation, grow wealth, and secure your future. Invest not just for wealth, but for financial freedom. Now, what is investing? Let's keep it simple. Investing is using your money to buy assets that generate income or value over time. Instead of just saving, you put your money to work, and that could be buying stocks, real estate, starting a business, or even lending money for interest. In short, savings protect your money, investing multiplies it. But here's the thing: every investment comes with some risks. The higher the potential reward, the higher the risk. Low risk investment like the government bonds, ETFs, mutual funds are safer but comes with small returns. But the high risk like the cryptos, the stocks can make it even more money, and it can chop in a lot, comes with a lot of risks. The key here is balancing your risks depending on your goal, your age, and how much you are willing to lose. Your time horizon is how long you will need that money back. If you are investing for 1 or 2 years, like for tuition or paying off rent in the next or something, you can try safe and low risk options like the government bonds, ETF, the mutual fund. But if you are investing for long term, like 10, 20, 30 years, you can afford to take in more risks for bigger rewards. The longer your time horizon, the more powerful compound interest becomes, and the more risk you can afford because you have more time to recover from short-term losses. Now, let's break down how people make money. One is active income. Active income is when you work for money, like your job, freelance, or maybe selling a product. And second is passive income. Passive income is when your money works for you. It's when you earn dividends from stocks, rental income, or interest from investments. Most people focus on active income, but the wealthy focus on building many passive income streams. The goal of investing is to eventually reach a point that your passive income covers your lifestyle, that's financial freedom. Investing means growing your money through assets and every investment comes with risk to reward balance. Your time horizon helps you to choose the right strategy, and through good passive income gives you freedom. Once you understand these basics, you are way ahead of most people. Think of investing as planting a tree. The earlier you plant, the stronger and taller it becomes, and you get to enjoy the shade later. Now, let's talk about the types of investment options out there. One is stocks. Stocks is owning a piece of a company. And two, you have bonds, the mutual fund, and ETFs, like lending the money to the government or companies. Three, you have real estate. That's building your wealth through properties. Four is cryptocurrency, holding a coin for a longer time. When the price increases in value, you sell it for your profit. If you stick with me to this part of the video, that means you are serious about building financial freedom. Take a second to give this video a thumbs up, comment your questions in the comment section, and don't forget to subscribe for future videos on in-depth about the types of investment options out there. Now, how to start investing? Step 1. Set clear goals. Before you invest a cedi or every dollar, you need to ask yourself, what am I investing for? Goals give your money a purpose, and every goal determines how you invest your money. If you are in for the short term, let's say buying a laptop in 6 months time or paying for rent next year, you will want a more safer and stable investment like the mutual fund, the bonds, or even just saving. But if you are in for the long term, like buying a house in the next 10 years, purchasing a car in the next 5 years to come, then you can take in more risks for more rewards like the stores, the cryptos, etc. Step 2 is to know your risk tolerance. The risk tolerance is to ask yourself, how much risk am I comfortable with? If I invest my money today and the market drops tomorrow, will I panic and sell, or stay calm and wait out? Your risk tolerance depends on your income, your age, and the amount of money you are willing or you can afford to lose. And here is the rule of thumb. Younger investors can take more risks. Why? Because they have more time to recover. But older investors or those who want a goal can be more conservative. Knowing your risk tolerance helps you to determine or pick the right investment. And step 3 is to choose a platform. Now, you need a place to buy and manage your investment, and that's when brokerage platform comes in. Brokerage platforms is a service that lets you buy stocks, ETFs, mutual funds, and many more. There are some platforms that offer expert advice and full service, but they are expensive. But there are others online that are low cost, like the Bamboo app, IC World, Data Bank if you are in Ghana or Africa. That lets you invest globally and locally, even with just small amounts. Step 4 is to open an account. Opening an investment account is like opening a bank account by digital, and you usually need your name, an active email address or phone number, and a valid ID, being your Ghana card, either Nigerian card or ECOWAS card or wherever you are, a passport picture. It's quick and easy, and some platforms approve you in a minute to an hour. When you are done, then you're good to invest. Step 5 is to start with index fund or mutual fund. Now you are in and you ask, what should you buy first? My advice is to start with index fund or mutual fund. These are bundles of stocks or companies that track the whole market, like the S&P 500 or your normal mutual fund investment. That gives you instant diversification and steady long-term growth. Instead of betting your money in one company, you own a small piece of hundreds of companies. It is easier and safer for beginners. Step number 6 is automate your investment. Now, here's a secret that builds wealth. Consistency beats timing. Instead of waiting for the perfect time to invest, set an automated investment plan. There are apps that let you choose 10 cedis, 20 cedis, or even 50 cedis a month to automatically go into your portfolio. That's called dollar cost averaging. It helps you buy more when prices are low and less when prices are high. It removes emotion and builds discipline. That's how you win. You don't need to be rich to start investing. You need to be ready, and now you are. Don't worry about time in the market. Focus on time in the market. Consistency beats perfection over time. Mistakes to avoid when investing. 1. Trying to get rich quick. Let's be real for a second. There's no shortcut to wealth. A lot of new investors jump into the market expecting to double their money in a month, or go in on crypto, hoping to become a millionaire overnight. That mindset is dangerous. Investing is a long-term game, not a lottery ticket. And those who truly build wealth do it slowly, steadily, and smoothly. Who is not doing any research? Would you think of buying a land without seeing the land first? or even do your research about the land, whether it has been sold to someone else or not. Probably not. So why should you jump into a stock, crypto, or real estate with zero research? I probably was everything when starting out, and it cost me some money. If you are putting your hard-earned money into a stock or any investment, make sure you do research about that stock, that company, that asset. How does it make money? What are the risks involved? Learn the basics. Don't just jump into any stock or crypto because your friend says so or some TikToker says. Three is letting your emotions drive your decision. Market go up, market go down. That's normal. But a lot of new investors panic when prices drop and sell too early just to watch price go up and just throw too much into the market. Emotions are the enemy to smart investing. Stay calm, have a plan, stick to it. Success comes from discipline, not drama. What is FOMO? For the fear of missing out. You hear everyone talking about a hot stock or coin going up, then all of a sudden you feel like you must jump in. That's when you buy high and sell low when the market crashes. Don't chase hype. Follow fundamentals, not trends. Investing based on Twitter or Instagram posts is not a strategy. 5 is not diversifying. Imagine putting all your money in one company. The next morning, the company goes bankrupt. That's why you need to diversify your money for your income, which means spreading out your money across multiple companies or investments. Never bet your entire life or future on one company or a friend's advice. A mixture of stocks or bonds protect you from big losses and also smooth your returns over time. Never put all your eggs in one basket unless you are comfortable losing big fast. Be smart, be consistent, and invest with purpose, not pressure. Start now, even small, and keep learning. The best investment you can make is investing in yourselves, your education, your skills, and your mindset. And the second best investment is putting your money to work, and now you know how. If you found this video helpful, make sure you hit the like button, share this video with a friend who needs to hear this, subscribe to this channel so you don't miss out on future videos. Drop your questions in the comment section. I reply to them all. This is Lord reminding you, don't just work for money, let money work for you. Thank you for watching. I will see you in my next one.